You know, I have my own urban farm because of the studies that I've done on the currency. So it's your health and it's your wealth in significance. And that's the way I always viewed it. So they're not separate. You know, we work for money, we need money as a tool of barter. There are other tools of barter that we will resort to, eggs and et cetera. But yeah, it's critical that people really understand because we are going into a new social, economic, and financial system, and you need to be prepared in every single way. Usually, I think the best place to start, because people don't really understand what money is, even though we work for it, we try and save some for the future, we barter with it, and we get paid for our time and our effort. So that's like the foundation is, you know, why do we even need to have money to begin with? And we needed a tool so that we could have some focus. You know, you can have a banker, you can have a baker, you can have a farmer. And so they tried a lot of things over the last 6,000 years. But what rose to the top is gold, because gold is a labor-based and savings-based money that meet all the criteria to be a good money. I mean, you can divide it and turn it into something else without loss of value. It is a store of value, and people don't really understand this, but the whole function or big purpose of gold is that it has the most functionality since it is used across the entire spectrum of the global economy. Therefore, it has the broadest base of demand of any financial asset, and it is the only financial asset that runs no counterparty risk. I mean, dollars are really a debt instrument. If you pull a bill out of your wallet and you look, it'll say Federal Reserve note. Well, a note is a debt instrument. You don't really own that. You're borrowing that. And that loss of purchasing power over time, also called inflation, is the fee for you using that. But for governments, going to a fiat, which is a government, bottom line, it's a government debt-based system. The purpose of that, two key purposes. For the government, it was a way to tax you without having to go through legislation because of the invisible or almost invisible inflation tax. And, you know, I mean, I'm 67, so I remember when inflation was a dirty word, right? Yeah. Now it's what's going to save everything, which is a lie. Yeah. But for corporations, it's really been what's enabled that income and wealth inequality, because the average wage was like $9,500 back in 1971. And a family of four could live with one wage earner. I'm not saying they were super wealthy, but they only needed one income to pay for a family of four. I think the average wage now, it might be a little bit higher than this, but it's something like 52,000. So nominally, wow, wouldn't you rather have 52,000 versus 9,500? But you need two wage earners. And obviously with the government programs, that they were giving these stimulus checks to people that were making 150,000 or less. You know, a lot of information is hiding in plain sight because they have to publish this stuff and they know people just never really go and look at it. But I will tell you, on the FRED website, which is the Federal Reserve Education Department website, if you were to go in and in the search bar, put purchasing power of the consumer dollar, it is dropping the fastest that I've seen in my career. And I've been doing this work on some level since 1964 when I was 10 years old. I mean, I've been groomed for this moment in time.
Yeah.
You know, so yeah, absolutely. Food and hunger. And when people are hungry, you know, they make choices that they would not otherwise make. It's probably why President Biden just increased food stamps, because that's a fact. It is actually why I converted my entire front property. My whole property is about food production. but I converted my front lawn and put in food hedges so that if people are walking by and they're hungry, they can pick a pomegranate. They can pick a zucchini. They can, pick some cherries. They can actually eat. You're looking at the prices go up as the purchasing power value of the dollar is going down. And really, this has been a genius. I mean, you have to give credit where credit's due. The whole system is actually genius because this was the first time historically when a central bank has attempted to control the rate and speed of inflation. And the big problem is twofold. Number one, interest rates around the world are anchored near zero. Some are, already nominally negative. I mean, and others are just a little bit above it. But the interest rates are the key tool that central bankers have to control that rate and speed of inflation. So when we in this country, we would go through a crisis, they would drop interest rates on average about 5.5 to 5.75%. That would then stimulate borrowing and spending, right? And it would speed up inflation when they dropped the interest rates. If inflation became too noticeable, they would raise the interest rates. That would slow down the borrowing and the spending. But because of where we are inside of this cycle, we're anchored at zero. They really can't raise interest rates. Every single country that has attempted to raise interest rates since 2009, 2008 really, when they dropped them to zero and below, including the US, has failed, every single one. And so, I knew in 2008 that the dollar died at that point and was put on life support, hospice, as you will, but life support with the QE. So what we're seeing is what we'll see more of. Prices going up faster, inflation prices going up much, much faster, and not keeping pace with the increase in wages. And you look at what the smartest guys in the room do for themselves. Who knows more about the money and the strategy that they are executing than central bankers?
Right.
They are accumulating gold and have been since the shift occurred in 2006. They knew that there was a crisis in the offing. That's my bet. I can't prove that, but I can look at the data and I can say, oh, okay, well, they knew it. So they started slowing down their selling and starting to accumulate their buying back in 2006. Since 2010, they have been central banks globally have been net buyers. They're accumulating massive amounts of physical gold.